Hello everyone, welcome to today's video. Good evening. If you're joining us for the first time, you're welcome. Today we'll be talking about demand and supply zone, more insights on why most analysis sometimes fail, because a whole lot of traders find it difficult to identify their entry point, their take profit, their stop loss. These three important things, your analysis might be good, but you might find out why is it that it hit my stop loss before playing out? Why is it that it didn't get to my take profit? So these two are very, very important in trading. So today we'll be talking about this another insight. If you've been following my live videos, I've been sharing some content on why your analysis fail. The reason your analysis might be correct, but it didn't play out the way you want it, or maybe it went the opposite direction. So why do you not trade right? So when you learn these key factors, you figure out that you will always be a better trader. So we'll be taking it a step by step. The last time we talked about trading our support and resistance. Today again we'll be talking about demand and supply zone. So it's an insight on support and resistance. So I'll be sharing my screen. Please, if you have any question, don't forget to drop it on the comment box. Current tab. Oh, no. Current window. Okay. So if you cannot see my screen, please indicate. I'm sharing my screen at the moment. So please, if you can see my screen or you cannot say, you should notify me on time. So today we'll be talking about our demand zone. Okay, always learn the right way to start your analysis. Always learn the right way to start your analysis. It's very, very helpful. Whenever you come into a chart, you go, at least you start as a daily trader, you start from the 1 day. As a daily trader, you start from the 1 day. So if you start from your 1 day, you try to squeeze your chart. Try to squeeze your chart. Get where your current price is. Check if your market is trending. Are we in an uptrend? Are we ranging? Are we in a downtrend? Because all this aids to your analysis. Always look to trade to the direction of the market. Don't counter trade the market trend. If the market is trending up, look to buy. If the market is trending down, look to sell. It's always more profitable when you're trading to the direction of the market. If the market is ranging, you look to buy or sell. So I've explained to you guys before how to identify a trending market and a ranging market. So if you identify a trending market, you identify a ranging market. So when you squeeze your chart, you try to get where the market is. Currently, this market on 1 day, this market is in an uptrend. So 1 day it's in an uptrend. So from the 1 day, you mark out your recent support and resistance and also your recent swings. So you mark out your recent support, this area, These are the recent supports. So currently, from the insight of your 1 day time frame, this market is at its support on this 1 day. So here is the resistance. So you would have to check if what happens at this support. Are we going to buy at this support, or are we looking to also sell at this support? Because in as much as market is in a support, it might break it through. It might be a sell signal. Remember when I talked about our breakouts? There are some breakouts. It will go down a bit, looks as if it's gonna sell, then it pulls back, and we're going back up. And those are the problems a lot of people also have in the market. So you need to identify what is happening in your support and resistance. So that is why there's a supply zone. I'm talking about the supply zone today and demand zone as well. So on this 1 day, I've marked out my support and resistance. So I'm gonna look for my demand and supply zone on this 1 day time frame. Now, your supply zone, it's an area of massive sell-off. Then your demand zone, it's an area of massive buy. So you should be looking for. Hold on. Trying to. Okay, there's no problem. Okay, so an area that has a massive sell-off or an area that has a massive buy. So not all support and resistance in the markets are actually significant. Sometimes markets ignore, there are a whole lot of noise in the market that might create some support and resistances. So there are support and resistances you actually pay attention to. Mind you, this is 1 day time frame. So as a daily trader, in as much as I'm trying to target my 1 day time frame, I also need to get to my lower time frame. I can't just take a trade from my analysis on the 1 day time frame. So I'm trying to mark out my area of demand and supply. So looking at this chart, okay, my demand area, it's an area that has a massive buy and an area that has a massive sell as your supply zone. So on this chart, I have an area that has the most supply zone is this place. Take a look. Okay, look, this is a massive supply zone. Look, I have red candlestick, 1, 2, 3, 4, 5, 6 candlestick. That means there was a very massive sell-off from this region without any green candle. So this is an area of very good supply zone. So what it tells you is that there is a whole lot of selling pressure at this region. So whenever market comes back to this zone, it's a very important zone. So the big institutions, most times they look out for an area that has more interest. So many traders trade noise, like they trade areas that can actually cause them a loss. So there are some areas in the market that has much interest. So those are the areas that you actually need to pick in every time frame you're trading. If it's 1 day, 4 hours, 15 minutes, always look for your area of demand zone. There are many ways to do analysis. Your analysis, my own, might not be the same, but whenever you're doing your analysis, make sure that the support and resistance are in your way. Then the demand zone and supply zone are also in your way. So on this 1 day, I've picked out my supply zone, an area that has a massive sell-off. So I picture out this area. From this area, you can see a very big sell-off from this area. Another area on this place is just here. This had just 5 candlesticks, but they are not as big as this. So this is an area of supply. This is an area of supply. Okay. Then I have to look for my area of demand. So I could only find, I have my area of supply zone here. I have the zone. You could look at my green candles. 1, 2, 3, 4, 5. Without any single red candlestick. So this is a very important area in this chart. So there was a massive buy, like very big buy on this zone without any sell at all. So this is an area of interest. So whenever you're trying to do in this uh on this area I'm on, this is my recent area on this chart. Just bear it in mind that there are more interested buyers in this region. So that's why not all supports are actually active. So most supports are just there to create noise in the market, and many traders feel like they are baited with those support and resistance. So I have an area. So when you're looking for this demand zone as well, you should also consider the volume of those candlestick, the height of those candlestick, that they should be a big buy. Like when you're looking at the movement and the swing, look at this place. We have some green candles, like 4, but when you look at the volume, they are very small. So this is not a good area of demand zone, because when you look at the height and the movement, this is actually very small. So this is not a good area of demand zone. So your demand zone should cause a big movement. So after this, from here to here is the movement of this swing. So this is an area of demand zone. So buyers are more interested in this area than any other place in this chart. So whenever you're looking to buy in this area, this area is ranging at this moment. This is not a trending market. This is a ranging market on this one day. So whenever you're looking to do anything in this area, so when you're looking to buy, it should be towards on this area that we are on. All these areas, they might react, don't get me wrong. Every support and resistance has a tendency of reacting to the market, but there are areas that are important in the market that you will be expecting a big reaction. When we got to this support, as we're saying now, there is no momentum at the moment. So this is a forex market. This is a British pound, Japanese yen. So the market is closed at the moment. It's not moving. So, but currently we have not seen any good sign at this support. A sign of a good support is when there is a good buy, a bounce at the support. Whenever there is a support, let's say there is a support and market comes to your support and market was coming down to your support, you should be expecting a quick reaction immediately. If market is coming down to your support and you start seeing something like this, a movement like this, it's better you exit. If you're taking any trade on this support, it's better you exit, because this is not a good sign. This is not a good sign of any demand zone. If area that has a good zone, like a good demand zone, would have an immediate bounce, showing you that buyers are active in this place. An area that is your support should not have so much consolidation. If you're seeing this, it's better to exit. It's better to exit than wait for more confirmation. I'm not saying it might not bounce, but seeing this in in an support or resistance, either it's not a good sign. If a price is coming to your resistance, let's say this is my resistance. If a price is coming to your resistance and it starts stalling, if it starts stalling, it's always best to exit this market. This market is likely going to go upwards. There is no guarantee though, but whenever price is stalling at area of resistance, it's better to exit. This is a very good reaction. When price is coming to your resistance, it should react immediately, showing you that there is a good sellers here. We're waiting for to take their sales from this price. So, but when you start seeing a slow movement as support or resistance, best to exit that particular movement because it's likely to break through. So don't get me wrong again, this is not like 100% sure. It can actually go back, but it needs more confirmation. So these are the points like you actually need as a trader. Is you don't trade all the time. There are some times you wait for the market, even as a good support or a good resistance. There are some time you need to take a break and watch the market perform without taking any trade. So let's say this market is coming down to this area that have a good demand. I'm expecting a good bounce from here. If there is no bounce from here, I'm going to exit this trade because if price comes to this place on this zone and I'm seeing something like this, I would exit this particular trade. I don't need to be seeing a slow movement at this zone. I need to see a big movement at this zone. So if like the first two candlesticks should be like a very good movement, then I know that this place is active. So on this area now, I've pointed out like the area of support and resistance that are very much better, like it like will have some interest. Also have this zone, though it's lesser. So it might actually be one big candlestick, like whatever it takes, but the massive buy and the swing as well. When you check the swing, you check the volume of the size of the candlestick, it should be very, very big. Like on those areas, you know that there are active buyers on those areas. If you see demand zone, if it's a supply zone, you know that there are active sellers. So on this one day, this my area is important area. This area is important. This area is important. So this less important though, but like this, it's not much because on this area we have some red candlesticks on this zone. So not like it's, but it's not actually there are good demand zone when it comes to having some slow movements going up like this. So I'll go to my 4 hours. I've actually marked out my one day, so probably I'll go to my 4 hours. So I'll check my 4 hours and see what is happening there. So this is my 4 hours. I'm going to delete everything from the one day. So this is my 4 hours. Now, checking my 4 hours, I need to see the areas that I have good demand zone. So watch, you have a demand zone here. That is a good demand. Look at this massive buy. So the zone, it's actually an interesting one. So for our supply zone, we have this area. Okay, now I'm trying to see if there is a good supply, a good demand zone again. Um, so I wanted to take a look at what happens when price comes to this area with a good demand zone. So and how other supports and resistance react as well. Now we have a support here. Okay, look at we have a support here. Then we have another support here. So when this price moved up and was retracing, uh coming to this support, we saw a small bounce at this support. This is showing you that there was no active buyers. Well, look at this movement from this support. This is a weak demand. So because we had some sales and sales and sales, so buyers was not much interested here. So look at what happens in this support. We had just a little pullback, and market continued its direction. So look at this zone. When market came to this zone, we had more reaction than it was at this particular moment. So our supply zone, so look at this zone. This is a very good sell off on this 4 hours time frame. So on this zone, look at this resistance here. I also mark this resistance. Let me show you. So it's not always every areas in the market are actually important. So that's the thing I'm trying to let you know. So you don't fall in trading every opportunity you see in the market. Market might be moving, but without showing a good opportunity. So you might just sit out and relax until you see some good signs before you jump in any market. So look at this zone. It had so much sell-off. Count the candlesticks, the red without any green, and you could see the height of it. So whenever markets came back to this zone, you see the reaction. We've been selling from here down to this place without any, without the price coming back to. So the sellers see on this area. So someone trying to sell on this area and someone that waited for the price to come back to this area, you see that this was a resistance, but it did not react. Look at this resistance. It's reacted very much better than this resistance. So look at this support here. Look at this support here. So price reacted. Look at all these zones. There are also many supports on this area. Like look, even when price coming to this place, there was no reaction. So not all support and resistances in the market is what you are actually gonna trade. Some you actually don't trade them at all. You let price go to an area of interest. It's not only you that is in the market. So the bigger traders always wait for this kind of areas. They don't just scalp on. It depends on the time frame you're trading. Maybe if you go to 15 minutes, you might see a couple of areas that might interest you. But this is a bonus to your analysis. This is a bonus when you're making your analysis. After you might be done with your analysis, you confirm the area that you might take your trade. The area that if price goes above, it might invalidate your uh, stop loss or maybe your entry or your take profit. So area that maybe if you take a trade here, you place your stop loss, maybe a close above this region, telling you that this area that was a good supply zone, the buyers have overcome. So that is how you set your stop loss and take profit. So if you try to do analysis in every part of the market, some might actually work out with your strategy and some might not work out. So these are the reasons that your strategy might be failing because you're always trying to chase the market without waiting for a good opportunity. Whenever you're trading in the direction of the market, in what the market is saying, you are always bound to, even if you're losing, it shouldn't be more than maybe out of 100 trades, you'll be losing like, let's say 10 or 20, because you're actually waiting to trade in an area that has some good uh, 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 areas that other traders are interested in. There are some scanty areas in the market that markets might just be running around and you might be chasing a trade, and at the end, you lose your money. So pay attention to this supply and demand zone. It's not so difficult to identify. When you come to a chart, just try to see an area with a good sell-off without any green candlestick, if at all, without a very good sell-off, without a green candlestick. Even if they are raised, maybe one, it's but an area with a good sell-off. So, but an area with all this movement, red, green, red, green, red, green, it's just showing so many support, resistance, support, resistance. So it's not actually a good area to trade. So let me see if there is any question. So I would. Okay. So far, there is no question. We continue. So just like this market at this region now, there are a whole lot of support and resistance, support and resistance. So this area in this market, you might just let it be without trading this zone because we have so much support resistance, support resistance. So most analysis at this direction might actually not play out because of the way there is a lot of buyers and sellers struggling at this zone, and it might end up in loss because it's just like this area there is a much battle than area that has a clear sign. Whenever you see so much struggle in the market, you always stay out. So you don't end up losing your money. You better not trade than trying to chase shadows. So I don't know if you guys actually understood whatever I'm talking about. So it's still supply and demand zone. So let's go down to 15 minutes. This is my 4 hours. So assuming I took my 4 hours trades, I would have been waiting for a sell off at this zone. I would have waiting for a buy at this zone. I might just in this whole area, I might just take uh one trade here, another trade here. Another area that has a little demand was just here, and you see when market came to this place, there was some reaction. So on these areas now, I don't actually see some good signs on this area, so I might literally stay out at this zone. So maybe check for other more confirmation, but this is just 4 hours. So I pointed out the areas that is here, good demand, good demand, good supply. That's all. Moving to 15 minutes. You do this from your 1 day, your 4 hours, your 15 minutes. So looking at my 15 minutes, okay, my 15 minutes is on a downtrend. My 15 minutes is on a downtrend. So you look to sell at this point in time. You look to sell. So maybe without much analysis, you might be waiting for an area of good supply. An area of good supply. I could mark out some points I'm seeing at the moment. Have this area. So of demand, I have this area. Mind you, this is my 15 minutes. So I'm not going further more than this. So I have this region as well. So I have a good demand here. I had a good supply here. Another supply zone, not so bad. Okay. So I want you to pay attention to the areas that are actually important. I have a good, not so good, just a little in this zone. So I need you to pay attention on these areas that I marked out. Look at this zone, look at this zone, and look at this zone. So this is the area I have my highest supply, which is this place. This area I had my highest demand, which is this place. There was no much supply here. Look at the candlestick. We actually a lot, but they don't have volume, like not so much. So, but this is just an area, not so good though, but you might actually be waiting for this area. So look at what price did when it came to it. It reacted, went above, but still, when it closed above this zone, we had some sell off. So these are like basic analysis. You don't actually need to do too much before you take your trades. When you spot your trend, which is the market structure, then you spot your support and resistance from the higher time frame. You check the direction of the market. You can actually take your trades with all these regions I'm actually mentioning without needing to analyze so much in your trade. You don't need to every time you will be looking to draw this pattern, to draw this strategy, input this. There are basic things that actually work. One, if you're in the trending market and you spot these areas, mind you, it will actually take an effect. Just like our this market is on a downtrend now, and we have this supply zone. So watch, this is a British pound, Japanese yen. Watch if my price could actually get to this zone. Uh, watch what happens. This might not have happened. So if your price get to this zone, I'll be looking to take some short trade at this point in time. So this is an area that interests me for now at this zone. When price gets to this zone, I'm looking to sell at this zone because I have so much supply, like massive sell-off, more than any other region in this side. So sellers are actually waiting for the price to come to this place so they could take their trade. So when this market goes to this place, I would actually take my trade. Well, whenever you're taking your trade, make sure you set your stop loss. So assuming you take this trade, your stop loss should be just take some. Okay, sometimes your stop loss should be if a candlestick closes above this zone. If there is a candlestick that closes above this zone, let's say a candlestick closing above this zone, just know that you should exit at this point, because it's actually a sign that the buyers are actually trying to take control. So, but if there is a good uh, sell off, and you ought to see a price rejection at this zone, maybe you should wait for your confirmation. At least one candlestick, it's enough. Sometimes you might see a rejection from this zone, just a rejection. You might wait for your bearish or bullish, your bearish candlestick to form, maybe a rejection like an inverse hammer or a bearish engulfing, but there should be a sign here aiding you to take your trades, supporting you as well. So at this zone, when you take your trade at this zone, maybe you might target this region, region, because that's the area of good demand as well. So you might just trade from here to here. Then your stop loss should be somewhere above this zone. You see that's your risk. You don't need to set your stop loss so high. No, set your stop loss an area of good invalidation. If a candle closes above this zone, it means that your analysis is not going to work out, because this has a good seller. So if buyers are getting over this zone, it means that they are trespassing that zone, and it means that that zone is weak. So maybe you should be exiting, have first candle, second candle without pulling back and closing below here. That means your stop loss should be just some zone. Why you shouldn't put your stop loss so close? Because sometimes some candlestick goes up and rejects completely. So that's the kind of sometimes they might take you off the market. So just put your stop loss just somewhere above, just some pips above. Then you target, yeah, this zone. So if there is any question so far, I've actually done 1 day, 4 hours, 15 minutes. Maybe you're finding it difficult to spot which is demand, which is supply. I'll be waiting for your questions. Uh, let's see if there is any question. Okay, where do I mark my support and resistance? Well, okay, then you see, support and resistance are actually different from demand zone and supply zone. Though demand can actually be support, and supply can actually be resistance as well. But when marking your support and resistances are not so difficult to spot in the market. Just an area that price reverse in this region. We have our resistance here. We have our resistance here. Resistance works with swing. Should be looking at your swing. This is your resistance. Your supports. These are supports. These are supports. This is your resistance. This is your resistance. At this moment, oh, just a little bit. So to mark your support and resistance, just check where there is a price reversal. I mean, this movement moving up to this place a little, even though it's a little. So there is a resistance here, but looking, it's a very weak resistance. Look at this place. There's a resistance here. So this is a very weak resistance. So whenever price is coming to this zone, it's actually going to break it, because this is telling you that there are very much low sellers in this region. If there is a good sellers here, they would push this price down. But seeing this resistance, it's actually very weak. So that's another thing to actually spot when you're trying to mark out your support and resistance. We have a resistance here. This zone, we have a resistance here. this is much better than, even there was a struggle at this moment. So, but on terms of support and resistance, it's just mark an area that has change in price. This is how support and resistance work. If a market is moving up and if it meets a resistance, that means it's gonna change direction. Even if it's a little, it's gonna change direction. This little is a resistance, even if it's very small. So if a market is coming down and meets an obstacle, it changes direction. So this point, this point that caused change in direction is what you call your support. Any point at all, even if it's little, maybe you have this zone or any point that causes your market to go up. Mind my drawing, it might not actually be so perfect. So this is a support, this is a support. So if there is a change in direction in the market movement at all, so that area is a support and resistance. A change in direction is a support and resistance. So then the area of demand and supply, it's area that had a very massive sell-off. When you're looking at it, you're looking at your bearish candlestick, red, red, red with a very large volume. So this is an area of good demand zone. So area of supply zone, it's area that has a very good buy. Green candles coming up like very massive. So you're seeing it, a lot of good reaction at this place. So this is an interest area of demand. This is an interest area of supply. But support and resistances can appear in any point in time. But demand and supply might actually be maybe like in some areas like this is actually any like it might not have a clear swing. It might not actually have a clear swing before you call it an area of supply or demand zone. So I don't know if there is any question, or if I didn't actually answer your question, you can comment again. So at this moment, still waiting because okay, it's over 30 minutes. And if you're joining us at the moment, oh, you can always rewatch the video when I'm done. Maybe you didn't get to join us as early as when we started, so you can always watch the videos when I'm done. They will always be in my page. You can share to your friends. Whenever you're watching any of the videos and you anything it's actually confusing, you can drop a comment. Whenever I see it, I'll have to talk about it in my next class, or maybe you should send me a message, or I would get to reply you on the comment box. If you actually, if you still gets to confuse you, that means you would have to book a private section if it's so much difficult that you cannot understand. So, well, always pay attention, very detailed attention when you're making your analysis. Never skip any points. Always pay detailed attention. You treat your support and resistance, you treat your breakouts, you treat your trend. Very much important. So you know the direction that you're going in the market. I think that's all for today. If there is any question, okay. All right. If since there is no question, okay, this will be the end of our class. Thanks for joining. Wherever you're watching us from, I hope to see you next time. Uh, so have a good night rest.